Have you ever, made a trade on your investment app, maybe bought some stock, sold some bonds, and then just kind of forgot about it? You get the notification, the money moves eventually. But have you ever really wondered what happens after you click that button? Like, what's the hidden machinery behind it all, the complex stuff that makes sure your trade actually goes through smoothly and securely?
Well, that's exactly what we're diving into today. The fascinating and honestly pretty complicated world of securities clearing and settlement, our mission. To cut through that complexity, we want to pull out the key bits, how a trade actually goes from just an idea to you owning that security. We've got some really detailed sources guiding us here.
Yeah, and it's crucial stuff. It's fundamental for, well, market integrity, for efficiency. But most people never see it. When you think about the sheer volume, I mean, millions, billions of electronic transactions happening constantly, especially in the US. Without a solid clearing and settlement system, it wouldn't just be messy. It'd be total chaos, unmanageable. Okay, right. Let's unpack that then. Start simple.
Yeah.
Clearing and settlement. Sounds formal. What's the basic idea? Like, what's the difference? Is it like agree on the deal versus actually handing over the goods?
That's a good way to put it, yeah. Clearing is basically the first part. It's where the buyer and seller, or usually their brokers, confirm all the details. What was traded, how much, the price, making sure everything matches up.
Okay.
It's the agreement phase. Then settlement, that's the action part. It's the simultaneous exchange. The seller delivers the security, the buyer pays up.
Okay.
That's when ownership officially transfers, the handover, like you said.
So clearing is the we agree part, settlement is the here you go part. Sounds simple enough on the surface, but I guess with millions of trades, it gets way more complex than just two people shaking hands.
Oh, absolutely. The concept's simple, but the modern reality, it involves a whole network of players, all connected through really sophisticated computer systems. And it's amazing how automated it is now, especially here in the U.S. Almost everything is electronic. Physical paper trades. Very, very rare these days, which is a good thing considering the old risks and, frankly, the hassle.
Right, I can only imagine trying to track paper certificates for millions of shares. So who coordinates all this electronic traffic? There has to be a central hub, right? I keep hearing about the DTCC, the Depository Trust and Clearing Corporation. Is that the nerve center? What exactly do they do?
That's them. The DTCC is, well, it's massive. It acts as both a huge securities depository, think of it as a vault, and the National Clearinghouse. The range of stuff they handle is just immense. Equities, obviously, corporate bonds, muni bonds, treasuries, mortgage-backed securities, money market stuff, even complex things like over-the-counter derivatives. And lately, they've moved into mutual funds and insurance products too. Their main job, their whole reason for being really, is to automate and centralize clearing and settlement for all their members. And a huge part of that was, and is, trying to eliminate physical securities entirely.
Eliminate physical paper. Wow,
Yeah.
that must have been a game changer for efficiency.
Totally. Think about it. Before automation, you literally had couriers running around cities with stock certificates. Slow, expensive, and pretty risky.
Yeah, risk of loss, theft.
Exactly.
Yeah.
So centralizing it, making it electronic or dematerializing it, makes things way faster, cheaper, and much, much safer. And technically, the DTCC umbrella covers two main subsidiaries you should know about. There's the NSCC, National Securities Clearing Corporation. That handles the equity trades. And then there's the FICC, Fixed Income Clearing Corporation. They do the bonds.
Got it. Equities and bonds split between NSCC and FICC, but all under the DTCC. And it's not a regular company aiming for profit, right? It's owned by the industry.
That's right. It's a nonprofit owned by its members, the big banks, the broker-dealers, investment banks, mutual fund companies. Basically, the users own the utility.
Makes sense. They all have a stake in it running smoothly.
Precisely. It fosters cooperation for market stability. And it's not just self-regulated. The SEC oversees the DTCC and its subsidiaries. Plus, the depository part is a member of the Federal Reserve System.
Yeah. So, serious oversight, which makes sense given how critical it is.
Definitely. It's core financial infrastructure.
Okay, so DTCC is the big processor.
Yeah.
The trades start with individual firms. How do they handle this? I understand there's a kind of division of labor.
There often is, yeah. Because setting up and running your own full-scale clearing operation is incredibly expensive and complex. Not everyone can or wants to do it. So you typically see two main types of firms involved in getting a trade processed: clearing firms and introducing firms.
Okay, clearing firms and introducing firms. Let's start with clearing firms. What defines them?
Clearing firms, sometimes called full-service firms, are usually the larger broker-dealers. They do it all. Execute the trade, clear it, settle it. They have the direct pipes, so to speak, into the DTCC. They process their own trades, and, importantly, they also process trades for other smaller firms that contract with them.
Right, so they handle the heavy lifting. Which brings us to the other type, introducing firms.
Exactly. Introducing firms are brokers that, well, introduce clients and take orders, but they don't handle the back office processing. They don't run their own clearing operations. Instead, they have an agreement, a contract with a clearing firm to handle all that processing for them.
So if I'm a customer of an introducing firm, who am I really dealing with? Where's my money, my stock?
That's a key point for you as an investor. You might interact day to day with your introducing broker, that's what you call, right?
Yeah.
But your actual cash and securities, they're typically held at the clearing firm. The clearing firm is the custodian, essentially.
Mm.
Think of it like this. Your introducing firm is your account manager, but the clearing firm is the bank vault holding your assets. They're usually the ones sending you official statements and confirmations, too.
Okay, that clears things up. So the statement might come from Big Clearing Core, but maybe mention my smaller broker, XYZ Investments, somewhere on it.
Exactly. And how that relationship is structured, how the accounts are set up between the introducing and clearing firm, usually falls into two main types: fully disclosed or omnibus.
Fully disclosed versus omnibus. Or what's the difference there for me, the customer?
Okay, fully disclosed means your introducing broker tells the clearing firm all about you. Your name, address, all your details. The clearing firm then sets up a separate account just for you, directly in their system. They hold your assets, and they handle the paperwork statements, confirms sent directly to you. Like you said, the paperwork will identify the clearing firm, maybe say ABC Clearing, but it will also reference your introducing firm, like for your account at XYZ Brokers. So you see both names.
Right, so they know who I am individually. What about the other way, omnibus?
Omnibus is different. In an omnibus setup, the introducing firm does not share your specific individual client details with the clearing firm. Instead, the clearing firm just sees one big account, an omnibus account, that holds assets for all of the introducing firm's customers lumped together.
Ah,
So the clearing firm doesn't know you personally. All the detailed record keeping about who owns what within that big pool, that responsibility stays with the introducing firm. You might see this if, say, a firm specializing in bonds, let's call them ABC bonds, occasionally handles a stock trade for a client. They might use DEF Clearing just for those stock trades. DEF Clearing just sees the ABC bonds omnibus account. They don't know about ABC's individual clients. ABC keeps all those specific records.
got it. So fully disclosed means the clearing firm knows me and sends my mail. Omnibus means my introducing firm knows me, and the clearing firm just sees one big pot belonging to my broker. That really dictates who's managing my specific data.
Precisely. It affects where statements come from and
Yes.
who holds the primary record of your individual holdings.
Now, these clearing firms, they don't just serve smaller brokers, do they? Who else uses their services?
No, definitely not just smaller brokers. They have a wide range of clients. Think big institutional players, investment companies, mutual funds, investment advisors managing portfolios, and a really big category, hedge funds.
Right, hedge funds.
Yeah.
Maybe quickly define those. They're sort of like private investment pools, right? Using complex strategies.
Yeah, exactly. Private, actively managed funds.
Yeah.
They often use pretty sophisticated approaches, maybe concentrated bets, arbitrage, short selling, derivatives, leverage, all aiming for, generally, higher returns than traditional funds.
Okay. So for complex clients like hedge funds, clearing firms offer something special, I hear. Something called prime brokerage.
Yes, prime brokerage is a key service. It's basically a bundled suite of services that clearing firms offer specifically to clients like hedge funds, but also other large institutions and sometimes very wealthy individuals. The huge advantage, the core benefit, is that the prime broker acts as a centralized hub for everything. All the trades the hedge fund does, even if they use multiple different brokers to actually execute those trades, all the resulting positions are held and consolidated at the single prime broker.
Ah, so before that, a hedge fund using, say, 5 different brokers for trades would have 5 separate accounts to track.
Exactly. Imagine the headache. Separate accounts, separate statements, trying to figure out your total exposure. It was an operational nightmare.
Wow.
Prime brokerage solves that. The fund can still use various brokers for execution. Maybe one has better tech for a certain asset, another offers great research, another gets them into IPOs.
Right, they can shop around for the best execution or service.
Correct. But all those trades, no matter where they're executed, are then given up to the prime broker for clearing and settlement. So the client gets one consolidated statement, one view of all their positions, margin calculations across the whole portfolio. It simplifies things dramatically.
That's huge. It's like having one master account instead of juggling dozens. A massive efficiency gain for those big players.
Absolutely fundamental for how sophisticated investors operate today.
Okay, so DTCC handles stocks, bonds, lots of other things through its subsidiaries, NSCC and FICC. But what about options? They don't clear options, do they?
Good question. No, the DTCC doesn't handle listed options clearing. That's a separate world, managed by a different entity.
Who's that?
That would be the Options Clearing Corporation, or the OCC. You see, listed options contracts based on stocks, indexes, currencies are derivative products. They trade on specific options exchanges, like the CBOE, Barrax, NYSE, ARCA, NASDAQ, PHLX, ISE. There are several major ones. And a key thing about these listed options is that their contract terms, strike price intervals, expiration dates are standardized.
Okay, standardization makes sense for exchange trading. So what's the OCC's exact role in this?
The OCC is critical. It actually issues and guarantees every single listed options contract. It effectively becomes the buyer to every seller and the seller to every buyer.
Oh, wow. So it stands in the middle of every trade.
Precisely. It acts as the central counterparty. Broker-dealers don't settle options trades with each other. They settle directly with the OCC. This dramatically reduces counterparty risk, the risk that the other side of your trade won't make good.
And how quickly does that happen?
Options trades have a faster settlement cycle. They have to settle between the broker and the OCC within one business day, T+1.
T+1, okay. And who oversees the OCC? Same as DTCC.
Yes, the OCC is also regulated by the SEC. And interestingly, it's owned by the exchanges where the options actually trade. So again, an industry utility structure.
Fascinating. So DTCC for stocks and bonds, OCC for options. We've covered the big clearinghouses and the brokers. But are there other players involved in making sure everything works behind the scenes? Like supporting roles?
Oh, definitely. There's a whole ecosystem. You have custodians, for instance.
Custodians, like a safe deposit box.
Sort of, yeah. Usually they're large banks or financial institutions whose job is simply to hold customers' securities safely. Nowadays, that's almost always in electronic or book entry form rather than holding actual paper certificates, but the function is safekeeping.
Makes sense. Who else?
And then you have registrars and transfer agents. Often it's the same company doing both jobs, but the rules are distinct.
Okay, what's the difference? Registrar versus transfer agent.
The registrar's main job is maintaining the definitive list of who owns the company's securities, the official ownership register. They track the name, address, tax ID of every registered owner, whether they hold a physical certificate or hold their shares in street name, meaning through their broker.
Okay, the official list keeper. And the transfer agent?
The transfer agent handles the actual mechanics of ownership changes. They issue new certificates or update book entry records when shares are sold. They cancel old ones. They also manage the shareholder list for things like stock splits or dividends, acting as a paying agent to distribute cash. Plus, they handle proxy voting materials, mail out annual reports, and deal with lost or stolen certificates. It's a busy role.
Wow, yeah. A lot of administrative heavy lifting just to keep track of who owns what and make sure they get paid and informed. It's easy to take for granted.
Very easy. And there's one more key player, especially for things like bonds.
Okay.
Securities trustees.
Trustees, what's their role?
For investments like bonds or certain loans or trusts, a trustee, often a bank, is appointed. Their job is to hold the security interests, like collateral, on behalf of the creditors, the bondholders, or lenders. They act in the interest of those investors. Some trustees also monitor the issuer to make sure they're keeping their promises, the covenants laid out in the bond agreement, the trust indenture. And if things go wrong, like a default or bankruptcy, the trustee steps in to represent the investor's interests.
So they're like the independent watchdog and representative for bondholders.
That's a good way to think about it, yeah.
Man, when you lay it all out, DTCC, OCC, clearing firms, introducing firms, custodians, registrars, transfer agents, trustees, it really is an incredible, complex dance happening constantly behind the curtain, all for what seems like a simple click on an app. The level of coordination is just mind-boggling.
It really is. It's this intricate web of specialized functions, all designed to ensure trades happen accurately, efficiently, and crucially with trust. Without that trust, the whole system breaks down.
And understanding even a bit of this hidden plumbing, I think it gives you a much deeper appreciation for how robust our financial markets generally are. It's not just magic that happens after you hit buy. There's this whole infrastructure making it work.
Exactly. It demystifies the process a bit and shows the layers of security and checks and balances involved. It highlights why it works most of the time so seamlessly.
It really does. And maybe it leaves us with a final thought, for you listening. What other really complex, maybe invisible systems are humming along in the background, enabling things we use every day? Think about the internet, power grids, logistics, and what might happen if those intricate behind-the-scenes systems ever faced a serious disruption. Something to definitely think about.